electric car maker Tesla. It reported a sharp drop in first quarter earnings, with demand for EVs slowing down. Okay, now joining us to explain how these numbers may affect Tesla's strategy going forward, as well as its stock price, is Karl Brauer. He is the Executive Analyst at iccars.com. Welcome to the program. Good to see you again.
Hey, great being on with you, Sean.
Let's talk about Tesla's earnings miss from what the analysts were expecting to come in. Firstly, one thing we do know, the street hates to be surprised, so maybe they were planning on this shortfall. Tell us what you think the analyst take is on this, and I'm a bit baffled why it went up 8% in value.
I think there was an expected miss, and it was really a question of how big of a miss. I think Elon had kind of laid the groundwork for this. Of course, we heard about a layoff last week, so there's been plenty of expectation for disappointment, and I think he was happy to manage the disappointment and maybe even emphasize the disappointment so that anything less than tremendous disappointment would be seen as an up versus a down. And then, of course, he did make some interesting predictions about low-cost vehicles and how soon they're going to be hitting the market, though in typical Elon style, there was not a lot of detail.
Yeah, indeed. And he may have also only stopped things for the time being. A 9% decline in sales compared to this time last year. Is this a sign lower demand for Tesla vehicles? We heard John Tarrant on the floor of the exchange saying that analysts think it's kind of tired looking. So specifically, what about the EV market? We know, remember that cold snap in winter was absolutely brutal to Teslas. Its battery did not perform well, and a lot of people who are down on EVs, that gave them a lot of fuel.
Yeah, I think Tesla is facing what every EV automaker is facing, except maybe the ones in China, which is faltering demand and reduced consumer spending power from inflation and interest rates. So there are more factors pulling people away from EVs currently than there are pushing them toward them, all EVs. Right. Then you got to lay in on top of that, Tesla once owned the market, and now they're competing every day with more models. They have less market share every single day. So they're only facing what every automaker is facing in the EV space, but it's more emphasized for them because they've gone from being the player to being one of many players.
Yeah, we're looking at a couple of Chinese EVs right now on our screen. What about the competition coming from the Chinese makers? Should Tesla be worried? Because in typical Elon fashion, a little more than a decade ago, he was boasting about, this is like a gnat on my arm, if you will. I can flick it off easily.
Everyone who is really every automaker, not even just the EV space, should be worried about the Chinese competition and all, because they really have come a long way in a short time. They're making higher quality cars across the board, and they're making them at very cost competitive, to say the least, prices. But certainly in the EV field, China's got a very impressive product that keeps getting better, and it seems to keep getting less expensive. And I don't know how someone like an Elon Musk and a Tesla fights that long term.
Yeah, and we do know that Elon Musk told investors that the more affordable Model 2 may begin production by early 2025, and that, of course, fueling a big bump in the Tesla stock as well. How important is this launch? And also, what about the board being split on where it goes? Will it have this robo vehicle, or will it have this cheaper version?
Yeah, clearly there's two big horses to put your money on, and they're not very similar. They're kind of taking the company in opposite directions and all. I think a lot of people would love to see him do both, but can they do both effectively, or should they emphasize one more than the other? Honestly, on the full self-driving thing, I feel like that's a much bigger gamble, simply because we know that every company is struggling with that. And, right. The call he's talking about, we've got this incremental, building upon itself, geometric computing power. And it's like, yeah, I've been hearing you say that for years. He was saying that Teslas were learning more than every other company about full self-driving 5 years ago, when he was first claiming it was going to be out by 2021 or 22. So I'm not at all impressed by that kind of discussion. And I do think the full self-driving technology by any company, I think we're talking years or even up to a decade, not quarters. So anyone who's waiting for that to save Tesla is probably going to have a painful wait. I think that the lower priced car is a much more promising component, but I still want to know details. We were supposed to have a low priced Model 3 not so long ago. It was supposed to be a $35,000 car. Now we've got inflation and a lot of other costs pushing up everything. So I don't know, again, if Tesla can pull off a sub $25,000 model.
Now, it also has reduced its workforce by a pretty significant margin. At first, it was expected to be about 10%, but now they've lost, what, 2,700 jobs in Texas, 3,300 in California, 6,000 jobs. That's tough to bounce back from and tell the street that you're doing well. So Tesla is saying it's part of restructuring. What are investors saying?
Well, I think investors are seeing a lot of the same things from Tesla that they saw for decades from traditional automakers, right? Dropping prices, increasing inventory, and layoffs. I mean, these were foreign concepts to Tesla for most of its history. And now, whether it's drops in revenue or drops in all these other areas, it's feeling very much like a traditional automaker all of a sudden. And I think that's giving investors reasonable concern.
Wow. Good stuff, Karl. This issue is not going away, and the big question, is it X? Is it Tesla? Is it space? What's driving Elon Musk? That's a discussion for another time. We'll have you back soon, my friend. Thank you.
Take care.